Welcome back, everyone. Sean Stevens here again with Metroplex Mortgage Services and another Loan Pro video quick tip. Last week, we discussed how your payment history can impact credit scores and affect mortgage qualifying. Today, we will review critical aspects of the amounts owed portion of your credit score. Before we begin, keep in mind that having a balance on a credit account doesn't necessarily mean you're a high-risk borrower, but it is important to understand how that can raise or lower your score. All right then, let's get started with the details. The amounts owed portion of your credit score equals 30% of the overall credit score breakdown. Here are a few factors that are taken into account when determining whether the amount you owe could potentially impact your score. First off, the amounts you owe on all accounts. It is important to note that even if you have consistently paid off your credit cards, your credit report may actually show a balance on your cards. You can usually assume that the balance reported in your last statement will be the amount that shows on your credit report. Remember, it is the ratio of what is owed compared to the credit limit which will impact your score, not the balance amount or actual dollar figures. Secondly, the amounts you owe on different types of accounts. Alongside of the original amount you owe, your credit score will take into consideration the amounts you owe on specific accounts, such as credit cards or installment loans. Number 3, how many accounts have balances? If you have a large number of accounts with amounts owed, this can indicate a higher risk of overextension, whether you're showing an amount owed on certain accounts. Maintaining a small balance with consistent payments can actually help your score, rather than having no balance and no payment activity. On-time payments combined with a low ratio of balances owed to your credit limits is a successful formula for helping to strengthen your credit score. How much of the total credit limit on an account is being used? If you are close to maxing out a credit card or several credit cards, this factor is weighted heavily within the scoring models and can cause a decrease in the score. How much of an installment loan you still owe? The amount of installment loan balance remaining compared to the amount originally borrowed does factor into the credit score calculation, but not as heavily as the revolving balance to credit limit criteria mentioned before. When you are preparing to purchase a home and have credit questions regarding either accounts owed or any other part of the credit score equation, you should always check with your mortgage professional for minimum credit requirements and to determine the best way to proceed with financing options. For any additional information on the FICO scoring model, please visit www.myfico.com. Remember, you can always take advantage of the Metroplex Mortgage free second opinion service, where we are able to review and provide guidance both on existing transactions or new pre-qualifications. Just simply call or email to discuss your scenario and let us show you the Metroplex difference. And I want to thank you for the continuing referrals and trusting us with all of your mortgage needs. Don't forget to subscribe for future video tips on the right, visit us on Facebook or LinkedIn, and forward with the share button through social media. I want everyone to make it a great day and look forward to seeing you right here for the next Tip of the Week.